All right, welcome to The Explainer. Today, we are diving into one of the biggest questions every new investor has to ask themselves. It can feel, well, pretty overwhelming, but stick with me, and by the end of this, you're going to have a really clear path forward. Okay, so you've decided you're ready to put your money to work. You open up an investing app, you're all set to go, and bam! Right away, you're hit with this huge choice. Do I buy individual stocks, or should I go for this thing called an ETF? They might sound kind of similar, but trust me, their whole philosophy on investing is completely different. Let's start with the one you've probably heard the most about. So first up, the classic path of buying stocks. I mean, when you picture an investor, this is probably what comes to mind, right? So what is a stock really? It's actually pretty simple. A stock, or you might hear it called a share, is just a tiny, tiny piece of ownership in one single company. So for example, if you buy one share of Apple, you literally own a very, very small fraction of the whole company. The brand, the patents, all of it. And this is the key thing to get about stock investing. Your success or your failure is completely tied to how that one single company does. If that company takes off like a rocket, awesome, you're along for the ride. But if it stumbles, well, your investment stumbles right along with it. And that right there presents a massive trade-off, doesn't it? On the one hand, if you pick the next big thing, the potential returns can be absolutely huge. I mean, you're directly plugged into that company's success story. But the flip side is just as intense. The risk is super high, it's all concentrated in one place, and honestly, it takes a ton of research to even try and pick good companies. And for a beginner, trying to build these safe, diversified portfolio this way is, well, it's really, really tough. Okay, so that's the path of betting on a single company. What's the alternative? Well, let's flip over and look at the world of ETFs, because they take a totally different approach. So what on earth is an ETF? The absolute best way to think about it is like a shopping basket. Instead of picking one single item off the shelf, you're buying a pre-made basket that's already filled with lots of different things. In this case, we're talking dozens, maybe even hundreds of different stocks. And here's the cool part. You can buy and sell that entire basket just as easily as if it were a single stock. This is really the magic of an ETF. With just one single purchase, just one click, you instantly own a small piece of every single company that's inside that basket. A classic example is an S&P 500 ETF. You buy one share of that, and boom, you own a tiny slice of the 500 biggest companies in the US. So the biggest pro here is obvious: instant diversification. Your eggs aren't all in one basket. Because you own so many different companies, if one of them has a bad year, it's not going to wreck your whole investment. This makes it way safer and a whole lot easier for beginners. Now, what's the trade-off? Well, you're probably not going to get those crazy, explosive returns you might get from picking one superstar stock. The goal here is more about steady, solid growth of the whole market. You do have to pay some small management fees, and you don't get to handpick which companies go into the basket. All right, so we've met our two contenders. Now it is time for the main event, the face-off. Let's put these two side by side and see how they really stack up on the stuff that matters most when you're just starting out. Okay, let's break this down point by point. First up, risk. With stocks, it's high. With ETFs, it's way safer, all thanks to that diversification. Next, reward. Stocks have that high home run potential, right? ETFs, on the other hand, are all about more stable, predictable growth. How about effort? Stocks demand a lot of research. ETFs are designed to be beginner-friendly. And finally, diversification. It's tough and can be expensive to do with individual stocks, but with an ETF, it's instant. It's built right in. So after looking at all of this, where does that leave us? What is the actual smartest choice for someone who's just beginning their journey in investing? And the verdict is pretty clear. For most people who are just starting out, the ETF is going to be the best bet. And the reason is simple. It's all about safety first. It gives you that broad exposure to the whole market, and you don't have the pressure of trying to become an expert stock picker overnight. It's a strategy that's built on a solid foundation of diversification and long-term, stable growth. But hey, this is really important to remember. Choosing ETFs now does not mean you can never, ever buy an individual stock. This isn't some permanent, final choice you're making. A better way to think about it is you're just picking the safest on-ramp to get onto the big highway of investing. In fact, a fantastic long-term strategy is to actually use both. You can start by building a really solid foundation with a core of broad, stable ETFs. Then, later on, as you learn more and get more confident, you can start to sprinkle in some individual stocks of companies that you really truly believe in. That way, you get the best of both worlds, the safety of the basket, plus the potential home run upside of picking your own winners. So, there you have it. You now understand the two main paths. You get the risks, you get the rewards, and you have a clear recommendation for where to start. The question really isn't what should I do anymore, it's when am I going to start? You've got the map, so are you ready to take that first step?